In this presentation, we will discuss the account construction work in progress as it relates to governmental accounting. When we think about the account construction work in process, we're usually thinking about a system or a time when the government is making a long-term type of project, a long-term capital asset, a construction of something such as a building, such as a bridge. When that is the case, we usually set up a capital project fund in order to track the flows, and we're also going to have to use a work in process account. Now, if we have used a job cost system, then it's going to be a similar process to using the work in process account in order to track the costs of the long-term project. So note, if we have a long-term project, then we're going to have a lot of costs related to them that might be taking a long period of time, might take years, might take 1 year, multiple years. As we incur those costs, we typically put them on the books and track them in a work in process type of account. When we consider a construction work in process type of account, we might think that we would see this in the capital project fund. The capital project fund is what we would typically use to track the activity of the capital project. If we're building a bridge, we make a capital project fund and we track the activity of the building of the bridge in the capital project fund. You would think that that would be the place we might see the construction work in process. However, that's not the case. The construction work in process account is going to be in the government-wide type of activities, the entity as a whole activities, it being closer to using an accrual basis. And the work in process account is an accrual based type account because what it's doing is capitalizing the assets. So as we make the building, we're putting it on the books as an asset as opposed to expending the costs, and then we'll transfer it from the construction work in process to the building, what's actually been completed. When you think about the fund accounting, the capital project, then we're going to be tracking the flow of activities, and we're going to be using more temporary accounts in order to do that. So as we go through this, keep in mind that we're talking about the government-wide type of activities using the construction work in process, not the capital project fund. Work in process account is used to capitalize cost of a construction project. That means we're going to capitalize the costs. We're not going to expense them as we incur the costs. We're going to put them on the books as an asset because we're building something like a building, a bridge, something like that. We're going to use the work in process to accumulate these costs into an asset account, work in process account, until we can then transfer it to whatever the related area it should go, a building, a bridge, whatever it is that we're making. Work in process is reported on the statement of net position with assets not being depreciated. So it's going to be reported on the statement of net position. That's going to be a balance sheet type of activity statement because it's going to be an asset that we're putting on the books. Work in process is going to be an asset. It's going to be a long-term asset. It's going to be a building or a bridge sometime in the future, which would typically be a capital asset or a depreciable asset once finished, but however, not finished yet. And therefore, when it's in the work in process account, we don't depreciate it. Capital assets are reclassified out of work in process on completion and is subject to depreciation at that point in time. So at the point of completion, we're going to track everything in this work in process account as we're making the building, as we're making the bridge. Once it's completed, then we're going to take it out of work in process. We're going to put it into the asset that has been completed. If we made a building, then we put it into the asset account of building. At that point in time, it is now subject to depreciation.